All right, thank you for joining us on our second panel. This is where we look at the future of retail. We'll start with some introductions and then we'll dive into some interesting questions around this. And again, for those listening, we are continuing to take questions and I will be posing them to our panelists in the second half of the panel. I'm going to start things off. Rebecca.
Hi, Rebecca Strom. I'm a senior director at Hines. I came to Hines from Macerich, which is a major mall REIT. Hines hired me about 1.5 years ago to help expand our retail footprint on the West Coast. We see tremendous opportunity in the retail space.
And Devin.
Hi, Devin Olson. I'm the director of real estate at Utah Retirement Systems. We have been cautiously optimistic about retail. We realize there's a lot of headwinds that are causing problems, but we're now looking at retail as a real opportunity to be able to buy low and hopefully sell high as we try to take advantage of really amazing locations that are maybe need to be turned into kind of a mixed use. And so we've been, when others have kind of shied away from retail, we've been pretty active in retail.
That's great. And so Devin will be providing a little bit of the investor perspective, the contrarian perspective. This should be a nice palate cleanser after the previous panel. But I'm going to start with you, Rebecca. What do you think are some of the most attractive retail subtypes for investment now and in the future?
I think it depends on your investment profile. As one of the previous panelists mentioned, the grocery anchored space has held up really well through COVID. Grocery anchored is still a good core opportunity for investors. There's also, tremendous opportunistic potential out there also, which is what I think Devin's going to dive into a little bit more, and where we're taking a really, really close look today at Hines. There are, the mall industry has been impacted by COVID, and COVID was really just an accelerant in the process, as previous panelists mentioned. Everything that's happening as a result of COVID was going to happen inevitably in retail. COVID just made it happen, 5 to 10 years, 10 years earlier. So we see tremendous opportunity in the mall space. I think there's 1,200 malls in the US today. Half of those are going to need some level of repositioning. Mall sites are large. They're 40 to 90 acres. How else can you access 40 to 90 acres in primary markets? They're typically close to public transit, or they have public transit on site. They're adjacent to major roads and freeways. The power center area sector needs to evolve also. So there's tremendous opportunity there. It's been impacted by bankruptcies. There are brands like Best Buy and CVS that will be closing a significant amount of stores over the next few years. They have no environment. And again, they sit on excellent dirt. So they have a great retail base that just needs to be right-sized and repositioned. So there is a gamut of investment potential in the retail space.
And I'm going to go over to you, Devin. As an investor, when you're thinking about retail, are there certain retail subtypes you're more interested in than others? Is it more of a grocery anchored approach, or are you thinking just across the whole spectrum of retail?
We've all seen these charts that show how much retail there is in the United States, and we're way more retailed than most countries.
Mm-hmm.
And when we look at those, we come to the conclusion, well, we need to de-retail, and those kind of properties that need to be de-retailed and taken out, they're probably not the buy for us. It's a little too risky a play, but there's a lot of properties that do have the ability to kind of convert them to a mixed use. And in the meantime, we found we could underwrite those pretty conservatively and get some amazing cap rates and discount rates on those. And even if we're not able to fulfill our hopes as far as turn them into multi-use property, we feel comfortable that we can maintain that kind of cash flow and still do well at the kind of prices we're able to get them at. So what kind of properties? Hey, we did a B mall where we thought, whoa, this thing's so cheap. We could, even if we had to kind of leave it the same, we felt very comfortable with it. And, the story's still out there, but, and to be, realized, but we're having a tremendous amount of volume of big, high profile tenants that want to come in there. And it's really location. It's just right on the freeway. There's the idea too that we're looking at is to converting part of it to apartments and trying to make it more dynamic and less parking lot looking, and signage and all sorts of things. It's a really fun project, as well as it's been nice to see the kind of activity, and so. We'll even look at something like that. I mean, we're not doing many of them because we just don't find many opportunities like that. But then, grocer anchored has been probably the mainstay of our retail portfolio. With grocer anchored, there's probably not as much of that ability to go vertical, but we did one in the Scottsdale area that we're looking to go vertical, but it's kind of on our timeline when there's demand. In the meantime, we're getting a good return on that. And power centers, kind of the same. I think the big key is you got to have a great location, and you don't want to overpay, so that you've built in plenty of contingencies that even if things don't go well, you're going to be okay.
I think that location, of course, I mean, that's always one of the lines in real estate, but let's kind of dig into that a little bit, Rebecca. What are some of the most attractive geographies, do you think, right now for retail investment? What sort of locations are most attractive?
I think, again, I'm gonna touch on what Devin said. Location is critical, and I think for investments where you're going to reposition existing retail, I think those primary markets are key. There might be more opportunity in the secondary and tertiary markets, but like your previous logistics panel, I don't know that I would play too much in those markets with retail repositioning. I would focus on the primary markets. We're looking at opportunities across the nation at Hines. For us in the West, we love LA, we love Orange County, we love San Diego, San Francisco, San Jose, Portland, Seattle. So really focusing on those primary markets.
And thinking about this, I've got a few questions coming in. We've talked a little bit about repositioning, and I do want to make sure we have plenty of time to talk about that. But before we get to that, I want to talk a little bit about just experiential retail. Rebecca, what types of retail experiences do you expect consumers to want in the future?
I think there's a couple, and I'd like to go just beyond experiential retail, if that's okay, Loretta. I think there's a couple
but not just a experiential retail, but like a retail experience. What's the broader, yes.
Okay. So I think there's a couple of prevalent trends in the retail space that I don't see going away anytime soon. Convenience. Consumers want convenience. They want to knock out as much as possible in one place. They want to buy that birthday present, pick up a sweater, meet a friend for lunch, get their workout in, pick up milk, all in the same place. So I think, in response, you're seeing traditional shopping centers augmenting their merchandise mixes to include more daily needs, more service uses like grocer, pharmacy, gym, daycare, Botox, why not? Also experiential retail, F&B. I mean, these shopping centers, traditional shopping centers, are becoming more for more people. We're also seeing a lot more mixed use projects under development, both mixed use of development on existing retail sites and ground up mixed use. People don't want to go in their cars on the weekend. So there really is something to this live, work, play theme that's out there. For investors, I mean, there are significant premiums in multifamily and office values and rents when it's adjacent to retail, and vice versa. I think, you know, customers want instant gratification. This goes hand in hand with convenience. They want the convenience of buying online, but they don't want to wait to enjoy those purchases. You know, this being the case, retailers like Target and Walmart are offering same-day delivery, 2-day shipping, buy online, pick up in store, curbside delivery. So how that product is getting to the customer is also changing by the retailer. Nordstrom and Macy's, they're rolling out smaller format stores because they want to be closer to their customers. They're not tied to being, you know, at a mall anymore. Customers want that seamless shopping experience. They want, you know, a good online, mobile, and bricks and mortar experience. The shopper's journey isn't one-dimensional, and I think people forget that. All channels play an important role in conversion or a sale. You know, as an example, a customer may start their journey by researching products online, but they might need to touch it and feel it in store to ultimately transact. You know, customers want to feel good about their purchases. They're buying sustainable fashion. They're supporting minority-owned, women-led businesses. I mean, national brands are promoting diversity. Sephora has their Accelerate program, which is fantastic. You know, consumers want to buy products that support a good cause, have a give back component. The health and wellness sector is growing. Retail is just so complicated, and it's constantly innovating itself. But I think, you know, one of the most important trends that we're seeing right now in the retail spaces is that great environment. The consumer wants a great environment, especially post-pandemic. You know, outdoor space is increasingly more important. I wish we could be doing this live. We're all starving for human interaction, and it's safest to meet people outdoors. Retailers want access to outdoor space too, just in case they're forced to shut their doors again. So green space is becoming and will continue to be a critical component of any retail or mixed-use project.
And so as a real estate investor, Rebecca, what are some of the implications? What are these trends driving when you're thinking about the real estate investment side?
You know, I think you have to think about so it's much more these days on these mixed use projects about creating a destination. You almost have to put a hospitality lens on thing. You have to give people a reason to want to leave their homes. They can get a lot of stuff delivered to their homes, and they're pressed for time. So it's so much about the environment these days. You know, in the past, you know, money, you would cut operating expense on things like landscaping to try to boost NOI. But now, like, you have to invest in that environment. You have to have a great central meeting space. I mean, you're seeing that pop up in every mixed use project across the United States. So you have to make capital investment in your projects because that environment is so critical. It's a big part of why people get into cars and leave their homes.
Do you have any thoughts? Here's a question from the audience. Do you have any thoughts on building mixed use that includes retail and logistics in the environment? And is there a way that this works? And I think this is something that comes up a lot, but I'm going to go to you, Rebecca, and then I might ask Devin if he has anything to add as well.
I think retail and logistics is a little bit harder. Retail and office, retail and multifamily all day long. It makes absolute sense. And there's benefits to things like retail and office from a shared parking perspective. Retail and logistics are a little bit harder. Logistics creates a lot of traffic on site that retailers don't like, and vice versa. It's also really hard to convince, municipalities and your previous panelists touched on this, to convert retail into industrial.
Yeah, the regulatory and the municipal level sound like a real challenge. Devin, do you have any thoughts on this in particular?
I think Rebecca did a great job dealing with it. I will say one thing relative to geographies and those kind of things. We kind of challenged our retail group to put together a list of checks as to what we would be interested in and what kind of things would cause us to shy away from a particular opportunity. And things like population growth, infill locations, off-market. Off-market is a real opportunity here because people don't, it's just such a difficult market to put a property through a broker. Most of our stuff is all off-market. We also look for properties that have a good increase in sales per square foot, where we want to see trends that help us be comfortable. And believe me, there are properties like that. It's not all gloom and doom. There's a lot of properties that are having their sales increase, as well as increasing rents. We kind of look for those type of properties that are basically on sale right now because everybody's so nervous about retail that we can pick those up at 50% off pricing. We like good health ratios where we look at what are they making relative to their rent. We want to see those kind of things. We also, there's a new technology of being able to track people's cell phones. And we've been using that to be, I know it's maybe controversial, great for us.
Turns out Devin is Big Brother who's watching.
So we find out, who's visiting this grocer. Where are they coming from? We're trying to figure out, does that person go visit the little smaller tenant while they're there and track their movement of their cell phone pings? And so there's all sorts of interesting things that you can do to try to overcome some of these risks that are out there for retail, which we believe they're real. It's not just all scare. We just need to figure out how to deal with those risks. And then in general, sales per square foot. How does the grocer or the tenants in this particular shopping center do relative to other shopping centers? We try to find out all those kind of things to determine, if this is a good defensive play, and then all the other comes into play if we can build an apartment complex and take somebody out or a location that's not all that great, and frankly reduce the retail footprint and increase everybody's sales. Those are the kind of things we're looking for.
I was just going to add that even in those situations where you are taking some retail square footage away, there's still typically a pretty good retail base that stays. So you're not wiping out retail completely. It was just overbuilt and you're really right sizing it.
And I think
Devin hit on Devin hit on another really, really good point. With retail, and it's different than other product type, you really need to understand how your retail product or the product that you're looking at compares to other retail within the market. You need to understand how the customer is using your retail site versus the other retail in the market.
And I think that leads into my question actually that I was going to come to you, which is what sort of technology, maybe from prop tech or broader tech industry, are you seeing in the retail? What kind of technological innovation is happening? I'll start with you, Rebecca. Devin mentioned a couple already.
I mean, from a retailer perspective, there is so much investment going into technology right now to improve the customer experience both in store and online. Things like mobile apps. Customers can pay with a mobile app in store versus waiting in line. They can use it to book in-store appointments or have items on their digital wish list waiting for them in a dressing room when they get to a store. Retailers are using mobile apps to provide exclusive offerings, build brand loyalty. There are things like QR codes. I mean, you can go into a store and you can scan a QR code to learn more about a product, the ingredients in the product, the origin of those products, the story about the making of the product. QR codes are great for storytelling, which is really important to these retail brands. It's how you get shopper invested in your brand. It's how you tell them your story and what you stand for. There's augmented reality, which is, I mean, blows my mind. I mean, it's being used in store displays. It's being used in fitting rooms. You know, in fitting rooms, a retailer can make a product recommendation based on what's in the fitting room with the customer. So it allows the shopper to see what they look like in that product without having to try it on. So if you're pressed for time, you can see yourself in an AR mirror. There's VR technology, which is also incredible. There are drones and droids. You know, all of this technology is making its way into retail space.
That is just, I'm agog. Like this sounds so exciting.
It is really exciting. It's really an exciting time in retail. And if I do one thing today, I want to dispel a really, really ugly rumor out there. Bricks and mortar retail isn't dead. It's evolving. And what I think we're all seeing play out in front of us, or what I know we're all seeing play out in front of us, is really this convergence of e-commerce and bricks and mortar.
And I think that leads me into another question that we've received in the audience. How is the shift to retail, to an experiential retail, and also to sort of the curbside pickup online orders affecting the brick and mortar retail? Can you talk a little bit about curbside and some of the other things, the buy online, pick up in store? Rebecca?
Yeah, sure. I think, again, it's affecting retail in a good way. I mean, just look at how Target fared during COVID. You know, Target had to pivot during COVID, and they had to start offering, you know, curbside delivery, buy online, pick up in store. I mean, they had to augment their business plan some, and they did so really, really successfully. You know, the thing about bricks and mortar compared to like an Amazon is that Target, Walmart, they have the bricks and they have the physical locations today. Amazon's out there expanding, but retailers have the physical locations today, and they're just using them differently. They're using them for fulfillment. They're using them as showrooms. They're just pivoting in terms of how they're using the space.
And so I want to talk a little bit more. I think both you and Devin have touched on the idea of repositioning into a more mixed use asset. What are the opportunities for repositioning retail, and how do they vary by maybe the type of retail property that you'd be looking at? I might start with you, Rebecca, and then I'll talk with Devin on this one.
So I think it's nuanced. Again, I mean, there's opportunity in all product type. There's, you know, probably larger mixed use opportunities, I'd say, in the enclosed or the regional mall space and the power center space, less so in other product type. But there is opportunity everywhere. And what that opportunity is going to look like is going to depend on the asset itself. You know, there could be mixed use development potential on an A+ regional mall. It's just going to be smaller in scale and probably on the periphery of that shopping center. Whereas you can find a B shopping center, and you're going to take down a lot more retail, and there's going to be more mixed use redevelopment.
And that mixed use, will it tend to be more apartment, more office, maybe medical office? What are some of the asset types that you see blending with retail?
Multifamily is a big one, especially on the West Coast where I'm at. There's just, you know, a tremendous housing shortage. So multifamily is a big one. Single family is also popping up. Again, these sites are large. You know, we're looking at a site right now that's 90 acres. There's a lot that you can do with 90 acres. Office, life science. I mean, everything right now, kind of, but logistics has a place on a retail site.
And Devin, what kind of opportunities for repositioning? I know you've already touched on this, but maybe we can kind of delve a little deeper as you think about repositioning.
Yeah, I think Rebecca's done a good job in listing some of those. I will say, you know, anecdotally, we have a property that we were looking at buying. We felt really good about the defensive aspect of it, which was that we could operate it as retail and make it work. You know, we had Trader Joe's, we had these key tenants that really drew a lot of people. But we also saw this opportunity to be able to take that and make a mixed use. And the mixed use manifests itself in that we were right next, actually contiguous to a hospital property. And so it was not very hard for us to work with that hospital and with the idea of converting it into to go vertical over part of that and make it into a medical office building. And you know, it's too soon to tell if that's going to be successful, but we're in pretty serious negotiations as to getting that done. And it's just kind of an example of really looking at the location. What is in demand there? And another property, it's taking some of the retail that's more of a fitness center type retail and converting it to a high-rise apartments. And there's just all of these various ideas that you have the luxury a little bit of sitting back and waiting for the right time, because you're doing okay as retail.
It's cash flowing.
Yeah, it's just kicking off, and not only cash flowing, but relative to most real estate these days, these are good cash yields.
They're good yields.
The appreciation side is too soon to tell, but cash flow, they're really kicking off some impressive numbers. And you know, we have the luxury of being able to try to do it when there's the demand for it. When that hospital comes to us and says, we need your space. And then we're in a very good negotiating stance. And in the meantime, we're doing just fine.
It sounds like you're really describing looking for an optionality in property, that you're not looking for failed retail, you're looking for successful retail with then the optionality for repositioning. Is that a good way of thinking about it, Devin?
Yeah, I think that fits it really well. And sometimes, I mean, we've got a property that it really doesn't have much retail, so it's really more kind of a hotel office, but it's right on the interstate, right between a major super regional mall. And, you know, we have a partner that's really a retail mentality. And, you know, we bought that property with the anticipation that we would actually be able to convert some of that into retail and be able to make it really a very nice mixed use property. So, you know, it's kind of, you feel like an artist that you're making something special with a blank canvas sometimes.
I love the idea that not only are we talking about retail being repositioned into mixed use, but we're talking about other property types being repositioned into a mixed use by adding the retail component.
Yeah, exactly. We're not big new retail people. I mean, we just kind of are a little bit more of the ilk of trying to find problems and solve them and take, you know, buy low at real high cap rates, low prices, and but where it has all this potential.
One of the things that's been really popular amongst investors increasingly over the last couple of years is the question of ESG and sustainability. How does sustainability fit into the retail space of the future? You don't always hear sustainability paired with retail. It often is, you know, making a green office building or something like that. How do you integrate sustainability into a retail building, Rebecca?
Again, I think there's a big focus on it on the retailer side and on the developer side. There's a big focus on reducing waste, food waste, plastic waste, clothing waste. You know, the volume of clothing Americans have thrown away has doubled in the last 20 years. I read an astounding stat the other day. 16 million tons of textile waste ended up in US landfills last year. That's a huge number. So there's a big focus in the space on reducing waste. Retailers are trying to motivate their customers to properly dispose of clothing. They're offering discounts on new purchases when older clothes are recycled with them. They're hosting recycling and upcycling pop-up events. Lululemon is a great example. They just got into the resell game with their like new program. So you turn in your old Lululemon gear, I'm a huge fan, for a gift card, and they'll clean it properly and resell it. New products are being produced using recycled materials, and you can rent clothes now. So a lot of focus on reducing waste on the retailer side. On the developer side and also on the retail side, projects are being designed more sustainably as well. LEED elements are being incorporated, such as LED lights, EMS systems, VOC-free paint. Sustainably sourced materials are being incorporated into design. Renewable energy, solar and wind power is being used. There are biodegradable mannequins. We're seeing the adaptive reuse of existing rundown buildings, which is the best way to be sustainable. There's a great example out there, one worth checking out if you're in the LA area. Urban Outfitters restored and opened in the historic Rialto Theater in downtown LA. I really recommend people taking a look at that.
And Devin, how do you think about some of these sustainability issues when you're looking at your retail investing?
Yeah, whenever there's a opportunity to either remodel or readapt and build new, we're pretty anxious to try to hit LEED standards and those kind of things. And so, it's not just a hold and let it sit type of mentality. It's a very intensive management of these assets. And anytime you have those kind of opportunities, you take advantage of them as far as some sustainability, and frankly, because it's good business.
Well, and I would say a lot of what's out there is outdated. And so there's OpEx savings in doing projects that are sustainable. So there's returns associated with it also.
What are some of the, we're getting toward the end of our panel. What are some of the future opportunities in retail investment, retail property investment in particular, and what might be some of the potential return ranges? So, what are sort of maybe more of a core investment versus more of a opportunistic? What are some of the different ways you might think about looking at the space? And I'm going to start with you, Devin, and then I'll go to Rebecca.
Yeah, we've been transacting on some of these grocery anchored shopping centers, probably in the 6.5 cap rate. We did one at 10. It's just kind of wild sometimes. But that's all according to how risky and those kind of things. But I'd say on most of those we're able to transact in the 6s. So by comparison, that's almost twice as high as some of the low numbers you see in other assets. And then you've got a good basis to be able to do other things with them. And hopefully that we can maintain that in the way of a defensive position. And it's pretty wide open as to various types of properties and where you can get the best opportunities and feel comfortable that you're going to be able to sustain that cash flow.
And Rebecca, your thoughts on this? We're doing, there's a lot of retail product hitting the market. There's a lot of off-market opportunity also. I think 2022 is going to be a big year in the retail space. There's core opportunity out there. We're more focused on the retail repositioning opportunities. So those are more, opportunistic in nature. So, we're solving for more opportunistic returns.
And as we come toward the end of our speaking, I'm hoping that each of you can kind of share a key takeaway. That what do you want? What do you want our audience and the investors in our audience? What do you want them to know as they leave? I'm going to start with Devin, and then Rebecca, I'll give you the last word. Devin, what do you think people should know?
I think that that retail isn't dead. There are opportunities. My guy said, "Oh, don't give them all our secrets."
Devin.
Yeah. He said, "Hey, they don't listen to me anyway." That they, we're cautiously optimistic that that if you buy the right location at these kind of prices that are available to you, that you'll be in good shape. But you have to make sure that you've underwritten it properly and that you're not overpaying. Because no matter how, if you can pay a 10 cap, and if you're not underwriting it properly, it's not going to work. So you really have to be disciplined and make sure that you are really confident that you can make your underwriting.
And Rebecca, what would be sort of a key takeaway for our audience about the retail industry?
Yeah, I think retail has been an ugly word for a while now, but there is real opportunity in the space. I'm with Devin. I think you need to be selective about the opportunities that you pursue. Location is kind of everything, but there's a lot of money to be made in this space if you acquire it right and you reposition it correctly. I will say that some of this retail repositioning takes time. So, as a word of caution, you need to be patient. And I think you've heard Devin say that a few times now on this panel. We believe in the space. It's kind of why I was hired at Heinz. And we think there's a lot of upside there.
I think I do appreciate both of you speaking to us. I do like the idea of doing this retail panel right in the midst of what is usually the biggest shopping season of the year. For those of you who are still need to have your shopping, I think you do have to stick to the brick and mortar at this point. Isn't that right, Rebecca?
I mean, there's other ways to get it. You can buy online, pick up in store. You can do curbside delivery, but yeah, support your brick and mortar.
So I want to thank both Rebecca and Devin for speaking with us on the retail panel. We're going to take a short break and then we will be back with our final logistics panel where we can go into some of the trends happening on that side in just about 10 plus minutes. Thank you so much.